Yo guys, just gonna welcome back to another video, and in this video I'm going to be explaining how we managed to catch a lovely move during FOMC, and we've managed to catch this live, and how I'm going to explain in this video how I sort of called it and how I was looking for a bullish move and it occurred. So without further ado, let's just jump straight into it. Before we get started, I'm going to explain that you may see that there are some colored boxes on my screen. This is why I sort of use, these are sort of time cycles, and they're sort of mapped out between 3 time cycles per session. So you may be able to see that we have the Asia session here anyway. As you know, a lot of traders, we use the Asia session to set the stage for the rest of the day. So you can see that this was mapped out as well. You can see that we have LO, 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 LOA, LOM, LOD. This is the London session. It's sort of split into 3 AMD cycle, 3 different sort of sections. We also have the AM session, which is the exact same: accumulation, manipulation, distribution, and then we have the PM session. So the reason why I'm sort of scaling these out is because it tells you that each 270-minute cycle, so each session is split into 3 90-minute cycles. So you can see the morning New York session is split into 3 90-minute cycles as well. And then you have the PM session, which is also split into 90-minute cycles. You may be wondering why I'm using, why we sort of use these 90-minute cycles. Well, why 90-minute and why not, any other sort of specific cycle? You may obviously know that we use the PXH and the PXL. Now, the reason why it's PX is because the X you can replace with either weekly, daily, monthly, hourly, session, all of that sort of stuff. So you can have the previous session high, previous session low. If you mark these out, these are key time-based liquidity levels, right? Or if you're a day trader, you can sort of drop down the time frames, because obviously if you're going to be on the 1 minute time frame, you can also, as well as using the prior daily low, you can use previous session highs and lows, or the previous 10-minute cycle, 30-minute cycle highs and lows, or the previous 90-minute cycle highs and lows. The reason why we say this is because if the market is running on an algorithm, it needs to refer back to specific points in time, right? So what we normally use is that the market could refer back to the previous 90-minute cycle high and then trade to the 90-minute cycle low. So I'm going to quickly just create a demonstration here and what I mean by these cycle highs and lows. So let's say, for example, you have a previous session high and low. Say this is the Asia high and this is the Asia low. What you're expecting for price to do is price will sort of move, accumulate, and then price will immediately gravitate towards the previous session high. Let's say that that is the Asia high. What we're then expecting is, because the Asia low is still not being breached, we're expecting for price to revert back down towards the Asia low. That's obviously an example. Now we can replace Asia to PDL, PDH. So let's say that's the prior daily high. Price takes out the prior daily high and then attacks the prior daily low, right? So this is sort of a purge and revert model. As you can see, purge and revert model, where this is sort of a higher probability sort of trade setup, because you can see a lot of the time where buy side gets taken, we immediately revert back to going towards the sell side, because the sell side has been left there as it's been sort of classed as engineering, and I can't spell engineering liquidity, right? Since we were engineering liquidity at the lows here and we were moving away, this is also split into 3 different sections. And what we can explain, show you, is that this is one section, this is a second section right here, and then this would be the third section. And obviously a lot of you may know what I'm going to be referring to. If we change the colors on these boxes, let's make this one a red box. I know this is a bearish PD, and then this one will be a green box, since we sort of expanded away, as you can see there. So this first area here is accumulation, and then yes, you have the manipulation up here, like so, and then finally we have the distribution. Now if you were trading this market and you were watching this, right, which move would you much rather trade? Would you trade the accumulation? Would you trade the manipulation? Some of you may get into that. I'd say that I would much rather trade the distribution because it is the expansion move. You can see that the risk reward on these trades are a lot better. Say for example, like something like that, because you manage to get a tight stop loss because you know the manipulation has already occurred. So you're expecting the distribution just to distribute where? To the lows of this accumulation here, and then to the lows of the session, which is the sort of draw on liquidity. Now this, you could say, it would be a market maker sell model, right? Anticipating there's lows down here, and then you could say that we were sort of gravitating back around, and that will be a market maker sell model. So with that sort of explanation out the way, now time to get into the real sort of chart and how we managed to catch this trade. So if you sort of explain what was happening throughout the day, you can see obviously with the Asia highs, you can see that price obviously did the similar sort of thing here, where price took out the Asia high. Where did it refer back to? It immediately gravitated back towards the Asia low. So you can use this on the day to day. Obviously we weren't going to trade the the London session because we had FOMC. So then what occurred after is, if we mark out the Asia low here and then the Asia high, like so. And let's actually not do that. Let's keep this in mind here. If we just keep out these highs marked here, because this is going to be key, you can see that with these highs, price never really referred back to the Asia highs, right? Price traded away from it. Now, if we were trading sort of higher time frame, we would be looking at this like, okay, so prices generally prices created equal highs here. You can see that we have left a high here and a high here. Although we swept outside it and came back down, I still class this as relatively equal highs. Why? Is because the order flow, underlying order flow, is still bullish anyway. Because if you think about it, price has sort of started its drop from here. This is sort of a consolidation area. Price is going to continue in the drop, and we're actually expecting a reversal to go where? To go above this high and back above this high if price is bullish, right? So then what was happening here is during the AM session, price was during the AM New York AM session, price manipulated the highs, and you can see in action here how price sort of manipulates and then reverts to the other side. This happens time and time again, where if you mark out the accumulation cycle of the morning session, which is the first sort of 90-minute cycle from 7 o'clock all the way to 8:25, obviously half 8 is when the next 90-minute cycle starts, you can see that price takes out the high of the prior accumulation cycle. What does it do? Immediately refers back to the low of the prior cycle. And you can sort of target these sort of moves knowing that, okay, price is taken at the prior high, we wait for the reversal, SMT, all that good stuff, and then price reverts back to the lows, right? So with that out of the way, we can then see that price is now pushed all the way back down here. Now we're getting towards the real good, animated sort of candles here with FOMC. But what I was mainly focusing on was the lunch cycle. Now the lunch cycle is quite key because you tend to get sort of sideways price action majority of the time when you trade lunch, when you're anticipating the lunch cycle. You can again, you can see that price is sort of consolidated. What does price do at the 1 o'clock open? Price immediately starts trading away, right? Leaving these lows, look how clean these lows are, right? No manipulation, just sort of gradual trend line, low resistance, liquidity, prices just trading away. The reason why it's doing that is because you have your accumulation phase here. Price is now currently manipulating away from where it needs to go. It's taken out the high here, right? It also wants to take out a few highs. And you may also see that we have this AM high, which is the morning session. So this, if I mark this out with a box, right? Remember how I said we have, 30-minute cycles, which are the dark gray boxes. You have the 90-minute cycles, which is from this time to this time, and this is why I say time and price as well. We also have, 3 90-minute cycles, which is a session, right? We have a 270-minute cycle, right? If I mark this whole box here, this is the whole morning session. Okay, I'm gonna mark this out right there and type it in, morning. With this being the morning session, what we could see is we could see the lows of the morning session taken out. Where does price refer back to? Would refer back to the highs. And you may be like, yo, wait, this price did not take out that high at all. What are you on about? Right? But then if I go over to ES, which is a correlating pair, and then I go back to the same day, we can see, is this the same day or is this a different day? That's a different day, sorry. If I go back here, we can see that on ES, you have the morning session here. If I drag this across like that, this is the morning session. And immediately from 1 o'clock, what did price do? Immediately took out the morning session high. So what that's telling me is that price has taken out the liquidity from the morning session on a different index. And this is where S&T is crazy, right? Because you may not see that high get taken on one index, but on the other index, you can see that that high was taken. It was breached, telling me that the morning session high liquidity is taken. Price is taken out the lunch high. Where is it now going to refer back to once this liquidity is going to been taken? It's going to refer back to the morning session lows and the lunch session lows, which have not been taken. Look what happens. On ES, it immediately refers back down to that. If you go back to NQ, where are we? We took that trade after this. With NQ, price did not take out the high. However, there was SMT at the highs there. So any reversal you get within these candles, you can then short, stop loss above that high, knowing that this is a protected high, and then target the lows of the lunch cycle. The reason why I'm going through this is because this is the first stage of the FOMC delivery, right? You know the FOMC is at 2 o'clock. We have the initial release, and then we have obviously the press conference, FOMC. I can't remember the order of it, but I'm just going to write second stage, right? Because that's all you need to care about really. And you have the first stage. I mentioned this on my live, right? Knowing that the initial, we want to be trading on the second stage, because the initial trade will be manipulation. Why? Because you can see that it's marked in the red box anyway, that we have the accumulation, manipulation, which is within there. And then from half two onwards, we have the distribution move, which would be the expansion, right? Now, it's not as clean because it's FOMC, right? We didn't get sort of a move just like one way and then the distribution was one way, you know, that would have been way too easy. What price did instead, as you can see, price took out the highs, 2 o'clock took out the lows. Then what did it do? It continued its order flow. And then once it got to a key area and key level at a key time, then price immediately pushed back towards where it needed to go to end the day. Now, where was that, you may say? You can see that price went back towards the Asia highs at the start of the day. Now this would be your accumulation, manipulation, distribution on the whole entire day, right? So now if we do it in per session basis, we can see the accumulation phase was pretty much the Asia session all the way to the end of the London session, or you could even say, yeah, the end of the London session. Then what occurred is the New York session AM manipulated along with the first stage of FOMC. What occurred in the final half an hour of the day, right? I had many people on my TikTok who were saying that when we were in this trade, price is never going to go back up there, man. Price is never going to go back up there. How come? Look at the price action of the day. That's telling you and showing you that there's engineering liquidity above here, and that IPDA needs to seek and refer back to the next liquidity pool that we have been generating throughout the whole day. Why not? Why was price not going any lower? Because we've taken out the liquidity that we needed to, right? And then as long as we have that S&T, and you can see I marked at Friday's low. The reason why price is significant here is because ES already took out Friday's low, whereas NQ didn't. So we have daily bullish SMT here as well, right? And you can go into your charts and have a look at that. But we've already taken out these lows. So price is already manipulated now. We already anticipate the manipulation, and that's why when we're going to get in, we're expecting price to just fly because the manipulation is done. And this is where a lot of traders struggle to know when to get in at the right time. They get in, they end up getting stopped out, they get faked out, they're like giving up, they're like, what's going on with my trade? I can never find the right move, right? That's because when you're entering probably during a manipulation cycle or even an accumulation cycle where price is supposed to be going sideways, right? But if you anticipate once the manipulation has been completed and then sort of look to get involved, that's when price is just going to drive towards your target, right? And then what ended up happening is that we did initially take a trade here, and I'm sure ICT also mentioned it on his video where he thought that this was just enough, right? But sometimes the market wanted to go one more, push down one more time, which it did. Now, this is where it's key that price referred back to the previous 90-minute cycle. Okay, so this is the PDH, PXH, and the PXL, as I explained from the start of my video, right? So this is the previous 90-minute cycle, PNM cycle, right? I'm just going to keep it like that. And sorry, that's a high, and this is the low, right? We'll just keep it like that. So this is the previous 90-minute cycle high, and this is the previous 90-minute cycle low. Immediately the next cycle opens, and the next 90-minute cycle opens. What does it do? It immediately pushes straight to the downside. This is the manipulation that we want to see when a new cycle opens. We want it to immediately seek to the bottom side of the low of the previous cycle, and now we're anticipating what? Remember from the start of the video? We're anticipating a purge and revert, right? The previous 90-minute cycle low is taken out. We can see that prices created all of this trendline liquidity, right? Which obviously we initially entered there, price fell, took us out, but then what did price do on the next sort of 5 minutes? Your job's not over. Once you get stopped out, don't think that okay, we're done, price is against my, it's never going to go back up there. You still have another opportunity. So once I saw this price immediately flipping this gap right here, you could have got in here, stop loss below the low. However, I waited. What did I wait for? You can see that we have a fair value gap, which is here, and price used it as support and then started using it as resistance. So at this point, this was a bearish PD. If I drag this across, once price got back above this level and closed back above, this is the next candle, next hourly candle. I entered here, and the stop loss was back below this PD array because I am anticipating the final hour of trading to continue towards the target, to just expand, because we got involved after the reversal has taken place, the manipulation has taken place now. We're anticipating for price to just expand. Where to? The prior 90-minute cycle high, right? You can see the prior 90-minute cycle high. Once we got there, the target was hit, and then we ended up taking profits at 123 RR. Yes, we could have got a better trade, getting in at the bottom here, and then that would have been your move right there at 125 R. But as long as we manage to catch profit every time we jump onto the charts, and especially trading FOMC, we know we are making improvements and we are getting there, and sooner or later we will catch the sort of whole distribution. But as long as you can keep jumping into the charts, putting the work in, you'll be able to see that you'll be able to sort of catch these moves. To be honest, what also happened is I did enter an extra contract here, and I'm going to explain to you how I managed to do that and why I managed to add an extra contract here, and why I was confident that price was not going to turn around or retrace and just continue going up. The reason why how I did that, and this is just going to be a bit a little extra information I'm going to give you guys, is can you see these darker grey boxes? The same way these are the 90-minute cycle highs and lows, these are the previous 30-minute highs and lows, right? So I'm going to do 30-minute high. Now what they're expected to do is the high and lows of these cycles should be acted as support and resistance, right? So this is a high. If price pushes above this, I expect it to be used as support to hold price up, right? So if it's support, we're going to go to bullish PD, we're going to drag it across. Once price closed above it, I'm expecting this area to be used as support, and look at that. Look how price just came back into it, used it as support. There was SMT at these lows here, right? I think it was around about there. There's like a 10-minute cycle SMT here with YM, and then what we ended up getting was an inversion fair value gap right there, and then from here, knowing that I'm expecting this high to hold, knowing that we have SMT, knowing we had an inversion for an entry, the confluences were there, tick, 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 knowing that we're still in our timing as well, and knowing that price needs to go back towards the prior cycle high, and we got FOMC, we got the volatility. Why not? That's where I added my extra contract. Stop loss was below this low. I brought all the stop losses up now, so one of them was in profit, one of them was obviously in loss, but the risk was managed. And then we ended up taking our partials right there. So we had a 1 to 3 on the initial trade and a 1 to 2 on the second trade. So that was absolutely a fantastic trade that we took there, made back the loss plus more, you know what I'm trying to say. So that was my explanation on how we managed to catch FOMC with time cycles. And now I understand that this may be confusing to a lot of you guys, and you may be like, yo, that's a lot of information, yo, what are you trying to do, man? But this is where I'm trying to say that if you want to sort of trade along with me and see this stuff day in, day out, you'll be able to start picking up these points day in, day out and apply them to your own trading, right? Knowing that we use that prior daily high, prior daily low, you know, the cycle highs, cycle lows, this is how we sort of form our trades on the daily, you know, on every other day that we, you know, approach the charts. What happened after is that price immediately continued up towards that Asia high, and that was the day sort of completed. And now this is where it was very confusing for a lot of people, saying that how can price just do that move all of a sudden, because, you know, they're focusing on the fundamentals, right? They're focusing on what this fundamental is going to come out, but then all I'm just caring about, and you saw this alive, guys, is I did not even care about the fundamentals at all. Obviously, yes, in key, if there's key sort of fundamentals that came out that are quite significant, then yes, this will obviously affect the markets in terms of order flow. But what I know is that if we look at the 1 hour time frame, just to sign off this video, we'll be able to see that with FOMC, you can see that this here was a prior weekly high. If I drag this across and do this there, prior weekly high, and then drag that across there, we'll be able to see that when price broke out of the prior weekly high, we created a fair value gap. And this is how I knew that I was on side with the market. If we drag this across, notice how these bodies respected the fair value gap that was created when we broke the prior weekly high. This is a time-based liquidity. Why? It's because as soon as price broke at the prior weekly high, which is a time-based level, it created an inefficiency. So it then needs to seek back towards that level, and once it did, we are going to monitor the candles on the hourly basis. And you can see that we had this big huge wick, right? And the good thing about this wick is that we managed, obviously you would have ended up getting in on this wick and the stop loss would have been below that low. What are you anticipating on the 1 hour time frame? For price to immediately go back into this box and close within it. We didn't want to see price to close without it. The fact that price was respecting the prior weekly high is showing us that this week is very bullish, right? So what happened from Wednesday? Wednesday, price pushed up higher than the prior weekly high and back up. And then what did Thursday do? Push all day higher. And then Friday, the same thing. So that is how we sort of anticipate that we were in bullish order flow, and that's why we weren't selling, right? We were only buying. So there was a lot of information there that I provided with you guys. Hope you guys enjoyed that video, and I hope it was very insightful. Leave a comment on this video if on what you've sort of, you know, what golden nuggets or gems you sort of received. But this is why I always say time then price, because you can look to get in at, you know, a specific time, and then price takes out your stop loss, and your psychology is just going to go, you know, out the window because you've been taken out. You don't know if you can get back in. But if you know when the right time is to enter, then you know that, okay, this is in, confluence has been hit, time to get involved, and I'm anticipating price to just fly towards the target. And then that is how we sort of catch these sort of market maker models here. As you can see, like straight back towards that high, price did a whole U-turn and then continued back towards that high and then continued even higher. So I'm going to sign off the video there. You'll be able to sort of see these time cycles. You can just search for time cycles as an indicator. It's right here, I trade size time cycles there. It's a free indicator right there. Obviously I have another one which is a paid one, but you can use this one where it will, and you can have some practice on your own chart. Have a look at how price refers back to, you know, uses the accumulation cycle to manipulate it and then continue, and how we use sessions and sessions highs and lows to sort of manipulate as well. So if you guys enjoyed that video, don't forget to leave a like, don't forget to subscribe, because I know I'm only teaching a handful of you guys, a little bit, you know, but this information is golden. So it's been a waste effects. Sign off there. Peace out.